Let's go across now to the management at IIFL Finance. Nirmal Jain, founder at the company, is now with us. So congratulations on a great set of numbers. Could you just talk to us about what happened in the quarter in terms of asset growth, deposit growth? What essentially are the NIMs like in the quarter?
Thank you so much. So quarter, we had all around good growth. So all our core businesses grew by 25% YOY in terms of loan growth, and with relatively getting some advantage of scale in the operating costs and the provisions. Our profit after tax grew by 36% YOY. So we reported a post-tax profit prior to minority interest of 397 crores, which was about 291 in the same quarter last year, and about 330 in the quarter before. So we had a good quarter. We are able to maintain the NIM margins at similar level of around 7%. That has been the historical trend. Good thing is that we have been able to further bring down the NPAs, which were about gross NPAs from 2.6 to something like 2.4, and net NPAs from 1.4 to 1.2. So I think all around a good quarter, and we are seeing traction all over. We are seeing good demand for credit. I think it's just picking up. And in terms of margins, I mean, interest rate hikes have happened, but most of them get passed on. And on a weighted average basis, we don't get so much impacted because a significant part of our loan is long term and has been contracted over 3 to 5 and also 10 years.
Okay, Nirmal, hi, this is Anisha also joining into the conversation. Just wanted to understand what kind of sustainability do you think this demand from the entire real estate pack can really continue? Because a large part of your portfolio is made up of real estate demand. With the interest rate upcycle, do you see some sort of plateauing of demand there?
So 36% of our portfolio is home loan, and these are affordable home loans. Our average ticket size last quarter was 15 lakh rupees. So you can imagine that the value of the house will be around say 20 lakh rupees, which will be in the far suburbs of cities like Mumbai, not even the near suburbs, or in a very small town. So we primarily focus on the affordable segment where we are seeing a strong demand and a strong recovery. So if you look at our portfolio, 32% is gold loan, which again is a very small ticket business. About 12% is microfinance, and the remaining 15% or so is our business loan. So and the 5% of our portfolio is a historical portfolio where the funding has been done to developers. So the real estate portfolio, if you mean the developer funding, that is just 5% of our book and has been coming down as we have not been doing incremental funding. But if you refer to mortgages which are affordable, then I think the demand is strong, and unless interest rates really go up significantly from here, I mean, till now, whatever interest rates hikes have happened, I think they have been taken in stride, and demand continues to be strong. So we really look at the retail demand, which is 95% of our portfolio, with a lot of optimism.
Talk about the housing demand with interest rates going up as you operate, as you just said that 15 lakhs, 20 lakhs is what you essentially operate at. So the EMI going up there, does that have a big impact on the demand?
No, it's a good question. So what happens in India? Normally the mortgages are for around 15 years or 10 to 15 years. So you actually, when the interest rates go up, then you can increase the tenor also. So the 10-year can be made 15, or 15 can be made 20, 25 also. So you don't change the EMI unless it really goes to a level of say 25 years and above. So I think till now most of the housing finance or home loan companies, or even the banks for that matter, have been able to manage to keep the EMI at the same level and increase the tenor. But if the interest rate continue to rise, then at some point in time you have to tweak your EMI, and that can be the real test of what happens to the demand and the credit quality. But at least we don't foresee that in the near future because I think that most of the interest rate hikes have happened. 50 basis point is expected, but you're right that if it goes up by say another 100, 150 or 200 basis point, then obviously there will be an impact.
Tell me about other segments, microfinance loans, demand for gold. What is it that you're witnessing on ground when it comes to those?
So gold loan has become intensely competitive. So a number of new players have jumped in, and just to gain initial market share, they are being lost leader in the sense that they are offering teaser rates which are not sustainable. And also many banks have become very aggressive, particularly the small banks and the south-based bank. So here you are under pressure, and you are not able to grow the business as fast as you would have liked to. Because if you see, we expanded our branch network by almost about 30-40% over the last 18 months, but still the gold loan growth in the last quarter was 4% quarter over quarter, which is not very significant because with this expanded network. So gold loan is one segment where we are seeing intense competition, kind of a price war. Many fintechs and the new age companies have come up. They are funded by private equity and they are trying to gain market share initially at a loss. So that business is passing through a bit of intense competition. Microfinance passed through difficult times in the COVID and moratorium restructuring and all those cases have been causing a lot of stress. But uh, incrementally, things are improving significantly. I think RBI has been very pragmatic in making rules very clear in terms of how the interest rates can be charged and also what kind of customers and how to do the income based sanction. So this industry has passed through difficult times in 2021, but I think the future looks significantly better and will recover very significantly in the next 2 quarters. And in terms of business loans, we focus on small ticket loan against property, which is maybe 10-20 lakh rupees, and also on the unsecured loan, which are done completely digitally. There we are seeing as the economy is recovering, the demand is strong and is picking up very well. And also this entire RBI crackdown on number of fintechs that are not regulated and kind of offering credit products which can be actually dangerous over a period of time. That also is good in a way because that will make way for orderly growth of fintech, and I think the industry will grow well here also when we are talking about digital lending of unsecured business loans.
Nirmal, since you're with us, we also have a perspective on the markets from you. What is the sense that you get of the outperformance of Indian markets? We recently spoke about this outperformance. Now numbers from banking, various other sectors have started to come. What is your take on the market?
See, India is indeed the bright star in a gloomy world today, and I think whatever what happens because the global news is so gloomy that people get overwhelmed by that, and sometimes they miss the opportunity here. But I think the economy is doing very well. The banking sector in particular, if you see last 8-10 years has become much stronger in relative terms vis-a-vis global peers. And if the economy continues to grow, then banking is a proxy for the economy and all other sectors. And this time around, what we are seeing that there is all-round reasons to be optimistic. Of course, the stock picking has to be bottom up, or you find out which stocks are overvalued or undervalued. But the general sentiment for most of the sectors is very positive in terms of fundamentals. Now, is something that one has to look at stock to stock.
Just in terms of the spree that you've seen in the banking space, NBFC space, even as an NBFC, you would go ahead and do the analysis of the banking and NBFC numbers. What is the sense you get about numbers coming in from a lot of the private NBFC banking names?
So, see, banking as well as NBFC, whenever there's an interest rate hike, they first benefit. Primarily because they are able to raise the interest rate for most of their loan assets much faster than the cost of their deposits or liabilities will go up. So I'm just making a general statement that the interest rate increase is positive in terms of profitability for banks as well as NBFCs. Over a longer time period, the interest rates remain high. That has an impact on the credit demand as well as there's a pressure on increasing the cost of funds also. But at least in the immediate short term, that benefit. And I think that impact probably you'll see in most of the results.
Okay, Nirmal, we'll let you go on that note. Thank you so much for joining us today and talking to us about your earnings as well as the markets as well. Quickly taking stock of